So moving on to the next kind of subject matter or topic, and we've already covered this very briefly from the aspect indicator, but I'm going to reference it again, is the slope of volume weighted average price. The slope of volume weighted average price is really helpful at identifying the direction, but also the likely continuation of a given market. So notice that VWAP has great inertia about it, a likelihood to continue doing whatever it is or has been doing. So during a strong downtrend day, it's like a boulder rolling downhill. It's very hard to stop it once it gets rolling. During a very sideways day, once it goes kind of flat, it's like a soda that's been left open for too long. You can't get those bubbles back in it, right? It kind of flattens out and stays dead or dull. Now that's not a guarantee, it is a likelihood. So it's kind of a common thing to keep your eyes peeled for, but it's not necessarily a guarantee. The idea of inertia helps us in the sense that if a market didn't have inertia, if it wasn't going to continue trending when it was trending, or continue going sideways when it's been going sideways, well, that sounds like a very volatile back and forth market that we could never effectively trade, right? In the event that we get a strong directional trend, we can kind of count on the fact that VWAP moving in a direction is pretty credible and likely to at least persist for some amount of time. Versus when a market is sideways and the VWAP is therefore flat and unsloping, we can count on the fact that it's going to take a lot of price action and a lot of volume in order to change that overarching market average. Notice also that behavior in the fast lane, so like what we see during the strong trending day, is what begets strong slope. During a relatively sideways day, you can imagine if we're not pushing outside of the deviation bands on either side, and by that I mean the 1 or -1 deviation band, that means that markets aren't really moving far outside of their normal or expected range. They're not expanding the range and therefore having more and more volatility and therefore going in a likely direction, like what we see here on the current day on Boeing. With this kind of sloping behavior, we look for a combination of both price being far away from VWAP, so price being in the fast lane, but also we need to see substantive volume. It's kind of hard. I'm going to have to pull this up and take a look. Now it's hard without much context, but I think we can all acknowledge Boeing is a major stock and was certainly a liquid stock today. It traded, several million shares, presumably, several 100,000, per candle, it looks like. So that kind of behavior in conjunction with decent volume is what we look for a trending environment. If the volume is fading off and the VWAP is flattening, well, that sounds like you're going sailing during a day when there's not very much wind, right? There's not much opportunity being presented in the same way. So to the point that we had just sort of made, like take a look at how we had held at the deviation band right there. So rather than breaking down and continuing our move lower, the market instead found a bounce at that -1 deviation level. So we're meeting one of the characteristics, right? That containment within the deviation bands. What about our slope? It's really flattening out. You can see here there's not very much going on the slope. Look at how flat the volume weighted average price is, right? After we had already run back up to VWAP, rejected there once, but then found support at the -1 deviation band, that was telling us it was unwilling to get into the fast lane and also unwilling to materially run up over the VWAP. It might oscillate and it might go sideways, but it's certainly not going to be either a strong directional up or a strong directional down. So I think that would have been the best clue that we would have had. So see how that abides by our understanding of what I drew before about a very flat VWAP? We have a very, oh, that was not a good drawing. Let's try that again. We have a very flat volume weighted average price. We are oscillating, or we expect to oscillate on either side of VWAP. And then finally, containment within the deviation bands. So that kind of containment told us we were not going to break lower and explore the lower fast lane. I mean, also the fact that we had such an aggressive sell-off earlier in the day means, you know, it's normal that we would have at least come back up to VWAP before resuming our sell-off, if that's what was likely to occur. But it stopped and gave us that clue after just having tried to sell off at the VWAP and failing. You know, without being able to calibrate this for every single stock, what I would recommend is when you see red or green on the slope, that is directional assessment. When you see chop and mostly gray or white or black neutral color area, that's very limited slope. Now, again, it needs to be calibrated to each stock. So for example, in this area I've drawn as a relative no slope, you can see it is downsloping all day. There is a downward drift to the market, but it's maybe not so strong that we're adamant about a directional day. I think the failure to get back above the VWAP was a chart clue. Getting into the fast lane was a chart clue. And the fact that there was any downward slope on the VWAP at all is another chart clue. But generally speaking, I like to see this kind of behavior or this kind of behavior, right? I want to see some significant slope readings for me to feel like there's real follow through or a likely continuation on the day. So to give you a numerical answer, anything beyond 2 or -2 in any sustained capacity is what I'm looking for.